Hello everyone, it's great to be back in front of all of you for yet another session on the Merit Shine Turbo series helping you prepare for the SEBI Grade A and the RBI Grade B exam. Today is an important day because it's the penultimate day for an important exam that's going to happen for you tomorrow. And I thought before we start this particular session, let me share an interesting story which can probably motivate you. So a few years ago, I went on a jungle safari. Right, and this was in the interiors of Karnataka, and I came across massively huge elephants, right, and probably as tall as twice of my height. And I saw those mahouts, or the people who basically take care of elephants, also being there at the side. And I realized that the elephants were actually chained. They had chains on their legs, right? And if you think about the size of those elephants, and obviously they are quite strong, it would hardly take them a second to just break those chains, break those shackles and be free. And I asked one of the mahouts as to why were the elephants still being chained? I mean, why didn't they realize that it's very easy for them to break? So the answer that the mahout gave me was right from their childhood. They basically conditioned to think that these chains are meant to hold them and not let them freely move about. Now, the point is, those chains were basically created to restrict their movement and curtail their freedom. But this was done at a very young age, right? The elephants are now huge and massively strong. But because of their mental conditioning, which says that they cannot break those chains, they cannot have their freedom, they cannot do what they want, the elephants are still conditioned to think that it is not possible to be done. They are still conditioned to think that they cannot win over their challenges. They cannot break free because they are thinking that they do not possess the skills, because they are thinking that they do not possess the ability, because they are thinking that they do not possess the strength. But what's the truth? The truth is it's all in the mind. They possess the abilities, they possess the strength to break through those shackles, be free, and do what they want in their lives. A lot of us are like those elephants. We are bound by chains which are purely imaginary, and we feel that we cannot break those chains, we cannot break those shackles and achieve what we are destined to achieve in life. Tomorrow is an opportunity for you to show to yourself and to the rest of the world that those chains that are holding you back, those chains of lack of confidence, those chains of not having enough faith on your ability, on your preparation, those chains can be broken. If you have the self-belief that you can do it, and if you firmly visualize and imagine that you can do it, trust me, no one is going to be able to stop you from achieving your goals. There should not be even an iota of doubt that you can achieve what you dream of achieving. So what are we waiting for? Let's break these shackles and achieve what we are meant to achieve, because at the end of the day, it's all in the mind. So on that note, let's kickstart the session today. And as always, have a set of questions for you, and we will use those questions to figure out the concepts. And as always, I expect you to pause the video for 30 seconds, jot down your answers, and then look at the discussion. So let's get started. So let's kickstart today's session with the basic understanding of what essentially is there in chapters 8 and 11. So chapter 8 basically carries on from your sections 123 till 127. It's a fairly short chapter, and it basically talks about the declaration and your payments of dividends. That's the concept that is getting covered in chapter 8. So right about from declaration of dividend to what happens to, let's say, the dividend goes unpaid, then basically talking about a very important section, which is your Investor Education and Protection Fund, or as they call it, IEPF. Then essentially what happens to rights to dividend, or what happens to your rights, or let's say bonus shares which are held in abeyance, right, pending any kind of share transfer registration, and what are the punishments in case of failure for distribution of dividends. All of that gets covered as far as chapter 8 is concerned. Now, when I move on to chapter 11, it essentially talks about your appointment and qualification of your directors. Again, a very important chapter, and essentially looks at section 149 till 172. Now, if I have a look at what exactly gets dealt with in this, what are the basic preliminary guidelines in terms of, let's say, the company requiring to have board of directors, the number of board of directors required, and types of board of directors, all of that get discussed here. Then section 150 talks about the selection of independent directors and the maintenance of a data bank of such kind of directors. 151 deals with another important aspect, which is the appointment of director, which is elected by your small shareholders. So that's an important categorization there as well. So the next question that comes in is, when do I categorize a shareholder as a small shareholder? So essentially, a small shareholder means a shareholder holding shares of nominal value of not more than 20,000 rupees or any such amount that's prescribed. So that's the categorization as far as a small shareholder is concerned, right? And the section basically deals with the groupings of such small shareholders and what percentage of such small shareholders should be there. That's what gets discussed in section 151. 152 talks about the appointment of directors. 153 then looks at the application of allotment of your DIN or your director identification number, and basically various regulations around that get discussed from 153 till 158. Then 159 talks about, let's say, the penalty for default in kind of certain provisions. 160 basically looks at the right of persons other than your retiring directors to stand for directorship. What are the guidelines and criteria around there? Then 161 essentially looks at appointment of an additional director or alternate directors and nominee directors and their definitions as such. 162 deals with the appointment of directors to be voted individually. Then your 163 looks at the option to adopt principle of proportional representation for the appointment of directors. So when does proportional representation come in? That gets discussed in section 163. 164 essentially deals with the disqualifications for the appointment of directors. Then 165 again deals with the number of directorships that a particular individual can take. 166 deals with their duties. 167 deals with vacations. 168 deals with resignation. 169 deals with the removal of directors. 170 basically looks at the register of directors and key managerial personnel and what kind of shareholding do they possess. And then 171 basically talks about the rights of the members of the company to basically inspect who all are the directors at any given point in time. And 172 basically discusses all the punishments therein as far as directorships are concerned. So this in a nutshell captures what essentially your chapter number 8 pertaining to dividends and chapter number 11 pertaining to directors deal with. And now what we're going to do is pick up a few questions and try to understand certain concepts by using those questions. So let us look at the first question for the day. As always, 30 seconds for you to pause the video and mark your answers. And here we go. So this essentially deals with section 123, which is basically declaration of dividend. And we are specifically looking at a portion which is talking about out of the reserves. Right? Now, in the event of inadequacy or absence of profits in any year, a company may declare dividend out of free reserves. So, only reserves that are allowed is basically your free reserves, subject to the fulfillment of the following conditions except, which means that अगर किसी साल में कंपनी ने profit नहीं कमाया है, or if it is there is a case of inadequacy or there is an absence of profit in any given year, then which of the conditions are required to be adhered to for them to still continue to declare dividend out of the reserves? And because of the word except here, we have to look at that condition which is not required, and all the other conditions need to be fulfilled. So if you look at the options here, what does it say? A says that the rate of dividend declared shall not exceed the average of the rates at which dividend was declared by it in the 3 years immediately preceding that year. Okay, and that year here refers to the year in which they're planning to give out the dividend. But it also says that this shall not apply to a company which has not declared any dividend in each of the 3 preceding financial years. So while I'm convinced about part 1 of option A, wherein it says that it cannot exceed the average of the rates at which dividend was declared by it in the past 3 years, right? If let's say a company is not having profits, and if it still wants to declare dividend, ideally that dividend cannot be higher than what they gave out in the last 3 years, and it should be an ideal average. Unless the company has performed exceptionally well and gained tremendous amount of profits, then it still makes sense to offer a higher rate of dividend, correct? So this makes a lot of logical sense, first part of option A. But when I look at the second part, it also seems convincing, saying that it shall not apply to a company which has not declared any dividend in the last 3 years. then obviously there is no concept of average rates being available in that case, right? So this particular option seems fairly logical to me. So this should ideally be a condition that can be applied. When I look at option B, what does it say? The total amount to be drawn from such accumulated profits shall not exceed 1/10 of the sum of its paid up capital and free reserves as appearing in the latest audited financial statements, right? So how much is the portion that can be drawn from such accumulated profits? That amount cannot exceed 1/10 of the paid up share capital plus the free reserves. That's what is being talked about in option B. Except for the fraction, rest of it obviously is straightforward. So we'll hold on to option B and see if we find any better fits. What does C say? It says the amount so drawn shall first be utilized to set off the losses incurred in the financial year in which dividend is declared before any dividend in respect to equity shares is declared. Again makes a lot of sense कि जब तक आपने losses को set off नहीं किया उसके पहले आप dividend कैसे pay off करोगे? Till the time you set off the losses, how can you pay dividend? So again, this also seems to be fairly logical. Now look at option D. What does it say? Now it says the balance of reserves after such withdrawal shall not fall below 10% of its paid up share capital as appearing in the latest financial audited statement. Right? Again, it says the balance of reserves after such withdrawal should not fall below 10%. So the only doubt area is whether it should be 10% or probably higher or probably lower, right? And rest of the option seems to be fairly fine. So again, I'll hold on to option D as well. Let's look at option E. Carried over previous losses and depreciation not provided in the previous year or years are set off against the profit of the company of the current year. So again, makes a lot of logical sense. Just like we said in option C, that any losses incurred in that current financial year have to be set off. Similarly, any losses that have been carried over from the previous years also should be set off before the dividend gets paid off. So again, E makes a lot of logical sense. So the only confusion here is between option B and option D. Let's understand the difference between B and D. B is saying कितना amount आप withdraw कर सकते हो, and D बोल रहा है what is the balance that should remain after such withdrawal, right? So ideally, when I talk about a balance that is remaining after such withdrawal, I would want this number to be slightly higher, right? That's my only hunch in this case. So if I have no clue between these two, by pure thought process and pure logic, I will decide to go ahead with D, thinking that ideally I would want to have greater balance of reserves after the withdrawal is made, right? Let's try and see if our hunch or our guess is correct or not. Absolutely. In this case, the balance of reserves after such withdrawal shall not fall below 15% of its paid up share capital as appearing in the latest audited financial statement. And basically option B, which is talking about the total amount to be drawn, shall not exceed 1/10 of the paid up share capital and the free reserves. Now, why does it make sense to hold 15%? Because again, I'm trying to look at protecting the interests of the company, and as we all say from the accounting parlance, that any company is a going concern, which means company should continue to exist and continue to thrive, right? So with that perspective, if there are reserves, ideally I would not want to dispense all of those reserves in dividend, but have something available in the kitty to be utilized later. So from that perspective, 15% makes a lot of sense as compared to 10%. Which is where the correct answer in this case is 15%. Let's now move on to another very interesting concept, which is basically talking specifically about your dividend account. Now, if you look at the question or the paragraph itself, technically I can frame 6 to 7 questions out of this itself, but I've combined all of them into a single question so that we can cover more concepts. So if I try and read through what is given here, it says that where a dividend has been declared by a company, but it has not been paid or claimed, right? So ideally, who's supposed to claim? The person who's a member of the company and a shareholder, such person only will be claiming the amount. So ideally, it is talking about days. So as if you remember, we discussed that whenever we are talking about public or we are talking about shareholders, we should give them as much time as possible, right? So in this case, out of the given options, the maximum number of days that we can give is 30. So these are the two options that I would look more closely at. Then it says from the date of the declaration to any shareholder entitled to the payment of the dividend. And then it says that the company shall within dash days. So here it was the shareholder who has to claim and he has not claimed within a stipulated time. And now the second aspect is that the company within dash days, which means this is the time allocated to the company. So ideally, the time allocated to the company should be less than the time that is allocated to the shareholder. That's the basic thought process. So again, which of the options fit in that context, again, these two options will definitely get eliminated. So that strengthens my thought that either it has to be C or D, right? And again, from the date of expiry of the said period, so this is again the same day getting repeated, which is absolutely fine. Then we say the transfer of the total amount of dividend which remains unpaid or unclaimed should be transferred to a special account to be opened by the company in that behalf in any scheduled bank, right? Now, what is such account called? So if I look at the options given here, it has missing dividend, unpaid dividend, and investor education and dividend protection account. So there is no case of missing dividend in this case. There is no point of calling it a missing dividend account. Unpaid dividend account makes more sense because at the end of the day, you would still be aware of who your members are and you would have tried to reach out to those members as a company and pay them the dividend. So ideally, the dividend has not necessarily gone missing. It's just gone unpaid, right? Another temptation is this option which says investor protection and dividend protection, but there is no such account by this name, right? So automatically through elimination, I have gravitated towards option C as my possible correct answer. But in any case, let's try and validate with the other blanks as well, right? So basically, it will create a special account called the unpaid dividend account, and the company shall within a period of dash days of making any transfer of amount as above to the said account, prepare a statement containing the names, last known address, and the unpaid dividend to be paid to each person and place it on the website of the company and also on the website provided by the central government, if at all, for this purpose, in any form or manner or other particulars as may be prescribed, right? So ideally, this is basically saying that एक वो अकाउंट क्रिएट करने के बाद कितने दिनों के अंदर कंपनी को ये डिटेल्स पब्लिकली विजिबल बनाने हैं. So ideally in this case, I would definitely give some amount of time to the company for basically collating all this information and putting it on the website and also on the website of the central government or let's say any other particulars that may be required. So company should get enough time. So 90 days is a good enough time to do that, right? Now next it says that if any default is made in transferring the total amount referred above or any part thereof to the said account, which is basically your unpaid dividend account of the company, then the company shall pay from the date of such defaults interest on so much of the amount that has not been transferred to the said account. So this is basically referring to the interest that needs to be paid pertaining to an amount that needs to be flowing into the unpaid dividend account, right? And generally, if you remember, we basically talked about the general penal rate of interest to be around 12% per annum. This is the interest that is being charged for not transferring the amount to the unpaid dividend account. Understand this. Only transferring the amount to the unpaid dividend account. It's not talking about transferring the amount to a shareholder, right? Which is where the penal interest appears to be slightly lower. And mostly we'll find that in such scenarios, the interest rate is usually around 12%, right? So this again makes a lot of sense. Then it says any money transferred to the said account of a company in pursuance of this section, which remains unpaid or unclaimed for a period of dash years. कितने साल तक वो unclaimed रहा या unpaid रहा, that is important for us to consider, and that time period has been given as 7 years, right? So if for 7 years nobody has come to claim that particular amount which is lying in the unpaid dividend account, then the amount in that case from the date of such transfer shall be transferred by the company along with whatever is the interest accrued, if any, to the fund which is basically called as your Investor Education and Protection Fund, which we discussed as part of section 125, and that's the section that is getting discussed as well. So we validated option C to be correct in all the aspects that we wanted to discuss. So quickly running through, in case there is a dividend to be paid and it's not claimed, then basically it has to be paid within 30 days and the member or the shareholder can claim within 30 days. And after those 30 days, the company has to, within the next 7 days, transfer the amount into the unpaid dividend account, right? And after transferring the amount to the unpaid dividend account within the next 90 days, the company has to make this information public, right? And if for whatever reason the amount could not be transferred to the unpaid dividend account, then there is a penal interest of 12% that would be applicable, right? And if after all of this in the unpaid dividend account for 7 years, the amount remains unclaimed or unpaid, then basically that amount along with any accrued interest will be transferred into the Investor Education and Protection Fund, which falls under section 125, right? So this basically in a nutshell is what we wanted to discuss as far as this section is concerned. Another important aspect that you need to remember is there's also a special clarification given out in this section which says that in case any dividend is paid or claimed for any year during the said period of 7 consecutive years, then the shares shall not be transferred to the Investor Education and Protection Fund. Which means अगर उन 7 सालों में कभी कुछ dividend pay हुआ या फिर कुछ claim आ गया उस amount पे, then that amount need not be transferred to the Investor Education and Protection Fund. Right? That's the additional clarification given in this case. Okay, so the answer in this case is obviously option C, which kind of covers all the bases as far as this question is concerned. Let's now move on to the third question for the day. What does this one deal with? This is basically talking about the punishment for failure to distribute the dividends. Okay. Now, in case a dividend has been declared by a company but has not been paid or the warrant in respect thereof has not been posted within 30 days from the date of declaration to any shareholder entitled to the payment of dividend, then every director of the company shall, if he is knowingly a party to the default, be punishable with imprisonment which may extend to 2 years and with fine which may not be less than 1,000 rupees for every day during which such default continues, and the company shall be liable to pay simple interest at the rate of 18% per annum during the period for which the default continues. So there's a fundamental difference that you need to understand here. So this 18% is not towards the amount being credited into the unpaid dividend account, but this 18% is the penal interest that is being charged on the company in case the amount is not paid to the corresponding shareholder. That's the thought process, right? That's a fundamental difference. So this is the penal interest rate that will be charged, and that 12% is basically meant for transferring the amount to the unpaid dividend account. So there's a difference between the two. Here it's not unpaid dividend. This is basically referring to the amount that needs to be paid as penal interest in case the dividend is not given to the shareholder, right, within 30 days. And any kind of default that is happening, it will be obviously applicable on the directors as well, wherein it could lead to imprisonment which may extend to 2 years and a fine which will not be less than rupees 1,000 for every single day for which the default continues. But this is just section 127. That's not necessarily the question. What is the question? Question says that provided that no offense under this section shall be deemed to have been committed except, right? So there are certain provisions given to the company and to its directors कि अगर आपने इस situation में ऐसा किया, then आप पे कोई penal code लागू नहीं होगा. So if you had done some of these, or let's say some things happened in one of these, then technically in that case you will not be liable to be punished, right? And of course there is one option which does not fit in this context. So let's try and figure out which option that is. Right? So option A says where the dividend could not be paid by reason of the operation of any law. Fair enough, makes logical sense कि अगर किसी law की वजह से dividend आप नहीं pay कर पाए, then technically आप penalize नहीं होगे. Makes a lot of logical sense, right? Then what does B say? Whether for any reason the failure to pay the dividend or post the warrant within the period under this section was due to any default on part of the company. This is tempting. So if it is on default of part of the company, why should the exception be applicable? The company should be penalized, right? So in all probability, I think this should be my exception and this should be my answer. But let's look at the other options as well. What does C say? It says where a shareholder has given directions to the company regarding the payment of the dividend and those directions cannot be complied with and the same has been communicated to him or her. Fair enough. Shareholder ने कुछ बोला, but company is not able to comply with those guidelines, and the fact that it has not been able to comply with those guidelines, it has been communicated to the shareholder as well. Makes a lot of logical sense. Company should not be penalized in that scenario. Then D says where there is a dispute regarding the right to receive the dividend. Absolutely. अगर dividend के right में ही dispute है, then how can the company be held liable? And let's look at E. It says where the dividend has been lawfully adjusted by the company against any sum due from the shareholder. Absolutely. If the shareholder is supposed to pay something and he is not paid, then it basically can set it off against any payment that the company is supposed to receive from such shareholder. Again, makes a lot of logical sense. So after having gone through all the options, it's fairly evident that it's option B, which is the correct answer, because in all other cases, the company should not be held liable and only in the case of option B, which basically talks about a default on part of the company itself, right, that it should definitely be held liable. So the answer in this case becomes option B. And what's the correct framing of this particular statement? Yeah, this is the correct framing, wherein I say that within the period under the section was not due to any default on part of the company, only then will the company not be liable, right? So that basically gives us an indication about this particular question. Okay, let's move on to the fourth question for the day. Now this is specifically dealing with section 125, which is your Investor Education and Protection Fund. It basically says that the central government shall constitute by notification an authority for administration of the fund consisting of a chairperson and such other members which cannot exceed a particular number, and it will also have a chief executive officer as the central government may appoint. So the IEPF is basically going to be a body which can have a chairperson, a chief executive officer and other such members, and the number basically cannot exceed 7, and that's the correct answer in this particular case. Okay, let's move on to the next one. So again, section 125 pertaining to IEPF. Now it talks about specifically what is the utilization of the IEPF essentially. In what cases can IEPF be utilized? So if I look at the options here, option A refers to the refund in respect of unclaimed dividends, matured deposits, matured debentures, the application money due for refund and interest thereon. Makes a lot of sense. The IEPF is meant to be an investor education and protection fund. So all of the refunds that have to be provided for unclaimed or matured aspects should definitely be allowed. Then it talks about promotion of investors education, awareness and protection. Absolutely, it fits in with the name of the fund itself. Then C talks about distribution of any disgorged amount among eligible and identifiable applicants for shares or debentures, shareholders, debenture holders or depositors who have suffered losses due to wrong actions by any person in accordance with the orders made by the court which has ordered the disgorgement. So we've discussed disgorgement in the chapter 3 if you remember, and any profits or material benefits that have been accrued from there should ideally be applied to all of those people or shareholders or debenture holders who have suffered losses. So this again makes a lot of sense. Then you're talking about option D, which says reimbursement of legal expenses incurred in pursuing class action suits under sections 37 and 245 by any members, debenture holders or depositors as may be sanctioned by the tribunal, right? So in this case, the only controversy could be the section numbers. Otherwise, this again makes a lot of logical sense that in case there was any legal expense that was incurred during this process, in case of any kind of class action suits that have been filed by the members or your debenture holders or your depositors, then this should definitely be applicable. So the doubt here is basically the number of your sections. So I'll hold on to this particular option. I'm not sure as yet. Let's look at option 5. It says any other purpose incidental to the development of IT infrastructure for SEBI, MCA and related operations, provided it is approved by the IEPF committee. So while this option looks to be fairly tempting that it is approved by the IEPF committee, but technically if you're spending on the IT infrastructure for SEBI, MCA and other related operations, then technically it defies the purpose of this fund, which is your investor education and protection, right? So IT infrastructure of SEBI, MCA and related operations is not something which is meant for investor education and protection. So as a result, while this option looks very tempting, I'm thinking that this has to be the option which will not be applicable. So I will take the guess that section number 37 and section 245 are actually the correct sections, and I'll mark option E as my correct answer. Let's try and look at the answer and see if you're correct or not. Absolutely. So you cannot use the fund for any purpose which is meant for the development of IT infrastructure for SEBI, MCA and related operations. Now when I talk about section 37, what does that deal with? Section 37 talks about the actions that can be taken by affected persons, and section 245 talks about a basic chapter which talks about the oppression and mismanagement, right? And within that it talks about the class action suits. Let's now move on to the sixth question for the day. What does it say? It says that every company shall have a board of directors consisting of individuals as directors and shall have, and it's basically given in terms of numbers, a minimum of 4 directors in case of a public company, minimum of 3 directors in case of a private company, 1 director in case of a 1-person company, and a maximum of 15 directors. It also says, subsequently as a corollary statement for us, that every company existing on or before the commencement of this act shall within 1 year from such commencement comply with the requirements of the provision. So in case the act came into existence and the company was formed earlier than the act, then it basically gets 1 year to comply with the guidelines. Now if I have to look at the options, C is definitely correct, right? It talks about 1 director in case of a 1-person company. Maximum of 15 directors also sounds correct. So I'm tempted to choose between option C and option E. But the only problem that I have is it always 15 directors, or it could be more or it could be less? So that's the temptation that I have. So I will basically try and gravitate towards option C as my correct answer. Let's try and see if it is correct or not. Right? So as we expected, option C is correct. Now, why is it correct? Because while you're allowed to have a maximum of 15 directors, there is a caveat there. The condition is that provided that a company may appoint more than 15 directors after passing a special resolution. So technically, while the number is 15, you can also look at going above 15 as well, which is what makes option D incorrect, right? And as far as your public company is concerned, there's a minimum of 3 directors. And as far as a private company is concerned, you're looking at 2 directors. That's the fundamental reason why options A, B and D became wrong, and why option C is the only correct answer in this case. Okay, let's move on to the 7th question for the day. Again, 30 seconds for you to pause the video and mark your answers. Okay, what does this one talk about? This basically talks about appointing a woman director on the board. Now it says, which of the following class of companies shall appoint at least 1 woman director except, right? So कौन सी कंपनीज हैं जिनको वुमेन डायरेक्टर डिप्लॉय करना ही है, except which of these companies, right? So every listed company, ideally, yes, you need to have at least 1 woman director. Now I'm definitely looking at this number as far as the company turnover and company paid up share capital, and I'm not really sure whether this number is correct or not. So if it basically mentions both B and C, I'm basically tempted to choose that option as the correct answer. So the only confusion as far as B and C is concerned is with regards to the number or the figure mentioned. Otherwise, it does make a lot of sense, right? And when you have an option like both B and C available in the question, I will gravitate towards that option, right? Let's try and see if we've got it right or not. So in this case, it is indeed the correct option, right? And what is the actual number? That's the correct number. Every other public company having a paid up share capital of 100 crore or more, and every other public company having a turnover of 300 crore or more. So if you're a public company and have a paid up share capital of rupees 100 crore or more, then you need to have at least 1 woman director. And if you're a public company having a turnover of rupees 300 crore or more, even then you need to have at least 1 woman director. Otherwise, this is definitely applicable to every listed company, right? Again, every such company needs to comply with this provision within 6 months from the date of its incorporation. It has to do that, right? And in case there is an intermittent vacancy that is created on the board because of a woman director leaving or for whatever reason, then this post or this position on the board needs to be filled up not later than the immediate next board meeting, or 3 months from the date of such vacancy, whichever is later, right? So if the vacancy got created and you have 3 months and your board meeting is, let's say, after 4 months, then within the next board meeting you need to have another woman director on board. Or if your next board meeting is within the next 1 month, then you still get 3 months within which you need to fill that vacancy. So I hope this is very clear, and it's understood that when you talk about both B and C, it is basically talking as per the latest audited financial statements, right? So this is about having women directors on board. Let's move on to the 8th question for the day. Again, 30 seconds for you to pause the video and mark your answers. And this one basically talks about your independent director on the board. So let's try and read through this one as well. What does it say? Every listed public company shall have at least 1/3 of the total number of directors as independent directors. And the other important point is that if that 1/3 is not a whole number, then the nearest highest whole number will be considered as the number that is required, right? And what it says is the central government may prescribe the minimum number of independent directors in case of any class or classes of public company. So there are specific guidelines for that as well, right? Now, an independent director in relation to a company basically means a director other than a managing director or a whole-time director or even a nominee director. When does a nominee director come into the picture? When it has been nominated by a particular government body or a regulatory body, then it becomes a nominee director, right? So, which are the basic definitions as far as an independent director is concerned? That's what is being discussed. And what is the exception to that is the question, right? So, independent director is the one who, in the opinion of the board, is a person of integrity and possesses relevant expertise and experience. Yeah, it's a fairly straightforward option, makes logical sense. Who is or was not a promoter of the company or its holding subsidiary or associate company. Absolutely makes sense. There should not be any conflict of interest. And again, it says who is not related to promoters or directors in the company, its holding subsidiary or associate company. Again, makes a lot of logical sense. A lot of corporate governance issues have cropped up because of this relation aspect, right? So this again is definitely a good definition. Look at option D. What does it say? Who has or had no pecuniary. Pecuniary relates to any kind of a monetary relationship other than remuneration, such as director or having transaction not exceeding 5% of his total income or such amount as may be prescribed with the company, its holding company or its subsidiary company or its associate company or their promoters or their directors during the 3 immediately preceding financial years or during the current financial year. Now, this option overall makes a lot of sense. Now, since I'm absolutely certain that A, B and C have to be part of the definition of an independent director, the only option that could possibly go wrong is option D. And where could it go wrong? Basically the numbers again, 5% and basically talking about 3 immediately preceding financial years. These are the only 2 numbers that could possibly go wrong, or it could also be a none of the above options as well. So I'll take a punt and I'll go ahead with option D. Let's try and see if I've got it correct or not. So what happens in this case? You're absolutely right, because it's option D and there cannot be any pecuniary relationship other than remuneration, and the transactions cannot exceed 10% of his total income, right, or such amount as may be prescribed. So the given condition is it cannot exceed 10% of the total income, and since we are already talking about the current financial year, it basically says during the immediately preceding 2 financial years rather than 3. So that's the fundamental difference why option D goes wrong over here, right? So transaction size cannot exceed 10%, and this entire conditionality is applicable for the current financial year and the immediately preceding 2 financial years, right? That's the correction as far as option D is concerned, and that's why it becomes our correct answer. Let's move on to the 9th question for the day. Again, 30 seconds for you to pause the video and jot down your answers. And here we go. So this one basically talks about the number of directorships that can be carried out. So if I look at this, it says that no person after the commencement of this act shall hold office as a director, including any alternate directorship, in more than dash number of companies at the same time, right? It also says that provided that the maximum number of public companies in which a person can be appointed as director shall not exceed dash. For reckoning the limit of public companies in which a person can be appointed as director, directorship in private companies that are either holding or subsidiary company of a public company shall also be included. Okay. Then, for reckoning the limits of directorships of said companies, the directorship in a dash company shall not be included. So this is a very interesting subsection which basically says that particular number of directorships are allowed. Within those particular number of directorships, only certain number of directorships are allowed in public companies. And even when we're talking about public companies, the directorship in private companies which are either holding or subsidiary company of a public limited company, in that case, the directorship of such private companies should also be included, right? And when you're talking about directorships, it also says that the directorship in a dash company shall not be included. Right. So technically speaking, a directorship in one person company should ideally be included. IFSC also makes sense. Private company, we've already seen that it is definitely considered. It could probably be a subsidiary company or a holding company, right? So it should also be included, right? Nidhi company also should ideally be included. So the only company which shall not be included is a dormant company. If you're a director of a dormant company, what difference does it make? I mean, you're not actually contributing to anything significant happening in any case, right? So hardly any decisions to be made. So dormant company appears to be the option which fits the bill perfectly, right? So the directorship in a dormant company shall not be included. Makes a lot of sense. The other aspect is that you're allowed to have directorships in 20 companies, out of which only 10 can be public. That's the context, right? So total number of directorships, including any alternate directorship, cannot be more than 20. And similarly, your public companies within that in the directorship cannot exceed 10. So that's the answer in this particular case. Right. So let's look at the final question for the day. As always, 30 seconds for you to pause the video and mark your answers. And here we go. So this basically talks about section 170, which is your register of directors and key managerial personnel and their shareholding. Right. So what does it say? This basically has two subsections, 1 and 2. So 1 says that every company shall keep at its registered office a register containing such particulars of its directors and key managerial personnel as may be prescribed, which shall include the details of securities held by each of them in the company or its holding subsidiary or subsidiary of companies, holding company or associate company. So any kind of combinations of your subsidiaries or holding companies. So basically you're saying that the record needs to be maintained, right? And what are the kind of securities that are held by each of them in the company. And second subsection basically talks about a return containing such particulars and documents as may be prescribed of the directors and the key managerial personnel shall be filed with the registrar within 30 days of the appointment of every director and key managerial personnel as the case may be, and within 30 days of any change that is taking place. So these are the two clauses that are there. Now within this, it says that which of the following is not an exception to the above, right? So let's try and look at the exceptions. So basically a government company in which the entire share capital is held by the central government, then there is no concept of sharing the details of securities held by the directors or key managerial personnel in the company, right? So obviously A should definitely be an exception, right? Look at option B. It says a government company in which the entire share capital is held by the state government or group of state governments or by the central government or by one or more of state governments. Again, share capital is not essentially being held by the directors or key managerial personnel. So again, this should definitely be an exception. Look at the other three. All of these are talking about specified IFSC companies, right? Specified IFSC public company, wherein clause 1 is applicable, but clause 2 you've been given 60 days. Similarly, it says specified IFSC private company, wherein clause 1 would be applicable, but clause 2 will be applicable with 60 days, which means that it has to be filed with the registrar within 60 days from the appointment of every director, and in case of any change, again within 60 days. So that's what is basically being talked about in options C and D. Let's look at option E. It says a specified IFSC public private company, wherein clause 2 would be applicable, but not clause 1. Right? So this doesn't make much sense, right? If I'm basically asking them to file this information with the registrar, whatever be the time period. So you're saying that if clause 2 is applicable, then within 30 days, if they have to file this information with the registrar, then technically, what is the information being filed? The information that is actually being filed is what is being asked in clause 1, right? You have to maintain that register with all those details. So if clause 1 itself is not applicable, there is no point in applying clause 2. Right. So as a result, E is basically a contradictory option, and this is the one that gets eliminated, which means that as far as section 170 is concerned, the register of directors and key managerial personnel and their shareholdings has to be maintained by the company, right? And this has to be available for the company itself and also the combination of its holding subsidiary and subsidiary companies. And secondly, it has to be filed with the registrar within 30 days of any change or within 30 days of appointment, right? In both the cases, it needs to be filed. Exceptions to that is basically your government companies, where the entire holding is with the central government or with a combination of central or state governments or completely with state governments. And the second exemption is that if it is your IFSC public or private companies, in that case, instead of 30 days, you'll be allotted 60 days to intimate such change with the registrar, right? That's the context. As a result, option in this case becomes option E. Excellent. So I hope you enjoyed today's session. I purposefully kept it short so that I don't take up too much of your time on this very crucial day. So how you plan out the day today, it entirely boils down to what kind of a person you are, right? And what kind of mental frame of mind that you like to be when you're actually about to take an exam. So if you're someone who's a crammer and prefers to basically burn the midnight oil even on the last day, then don't change it because someone else is not studying. So if you're someone who likes preparing even on the last day so that you maintain that momentum, you maintain that confidence, then continue doing that. Revise all your notes that you've made, look through our sessions quickly if you want, do all of that and be at peace. Similarly, if you're someone who does not like to study on the last day just because someone else is studying, don't force yourself to study. Just relax, just calm yourself down. Just quickly look through notes if you want, or let's say anything that you might want to refer to at the last minute, which is still fine. The most important thing today is your mental conditioning, right? Imagine yourself sitting in the examination hall. Imagine yourself doing really well. Imagine yourself cracking the exam, solving questions and coming out really happy, right? That's the visualization that is required at this point in time. And remember the story which I said at the beginning of the session, wherein it's all about the mind, right? If you feel that you've been chained by the shackles, you will continue to be chained by the shackles and you'll not be able to break free, right? It's all about your belief in your abilities. And if you trust yourself, if you trust your abilities, you can break free from those shackles and achieve what you're destined to achieve. And I'm damn sure that you're going to achieve your best possible result tomorrow. So on that note, have a fantastic day tomorrow. Ace this exam with flying colors. So have a fabulous day tomorrow and an excellent exam. And I'll see you soon in the next session. See you guys.